Morning, Market Chameleons and Dimitri Pargamonic, my friend from Philadelphia, the city of brotherly love.
Good morning, Will. How are you doing?
Excellent, excellent. We got a chameleon on from LA this morning, which is kind of cool in the chat.
Very nice. Very early. Yeah, let's start with the disclaimer. Good morning, everyone. Thanks for joining. 1 second, let me just bring my screen up here. Keep in mind before we start, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to help answer your questions and provide you with guidance. With that, let's get going.
All right, I'll stop sharing.
Yep. And I think what we'll do today, I'll take a look really quickly, anything moving into pre-market. We'll look at what's coming up in earnings, and I'm going to focus today maybe just on IBM. This way we could kind of go through steps of things we could check pre-earnings to help us, guide our decisions. All right. If you're looking for any type of setup or what you think may happen, let's take a look at certain different things that we could check prior to earnings. So if there are any questions along the way, let me know. I'm going to try to get to as many questions as I can. And if we have time, then we'll go look for some bullish, bearish ideas from the homepage.
Cool.
Sounds good. So this is the pre-market report. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. These are stocks that are trading in the pre-market hours. Really quickly, I want to filter out higher market cap stocks. I'm going to use this filter and look for stocks $20 billion market cap or higher. So I see 31 made the percentage gainers list, 4 in the percentage decliners list. From market breadth, that's more favorable to the bullish side at the open than bearish. A couple of them that are popping up in the morning: ASML up 4.6%, PCAR up 4.5%. These are low volumes, 19,000, 14,000. So doesn't really jump out at me. I think this one, ASML, is reacting to earnings. I see a couple car manufacturers on here. Ford, I think I saw General Motors in their KMI reported earnings yesterday. They're up 2.3%. General Motors up 1.5%. Let me take a look at the unfiltered report. And I see a couple of them popping up to the top that are low market cap stocks. Here's one $22 million market cap stock. This is up 233% on 7.5 million. So a lot of volume in that stock. Let me take a look. Looks like they're doing some kind of, I'm just looking at the headline news here, some kind of maybe strategic alliances with bigger companies. CLSN up 89% on 19 million shares. That's a $47 million market cap stock. Again, we see these almost every day just to save time, unless there's specific questions on them. I'm going to move on to earnings so we could focus more attention on a specific stock today and kind of walk through different steps.
Perfect.
Okay. Let's take a look at the upcoming earnings. And I did promise we're going to take a look at some fundamentals, because we are creating some tools to help with the fundamentals. I think we're going to start rolling out within the next 30 days. We'll start rolling out the first phase of those tools. But having said that, maybe we'll just take a look at from a fundamental perspective, some of our analysis in IBM. Before we get to that, this is a list of stocks, companies expected to report earnings in the next 2 weeks. I'm going to use this filter for stocks that trade at least 5,000 option contracts or more per day. Let's take a look at this tab. This is full report for next 2 weeks, that stocks that meet this criteria. This one reported IBM. That's today, I believe, after the market close. The straddle's implying a move of 4.4% in either direction. Remember, buying a call, buying a put. That compares to 3.3% 4-quarter average move and a 4.9% 12-quarter average move. So 1.1% above the 4-quarter average, 0.5% below that 12-quarter average. The high move in IBM, 8.5% in the last 12 quarters. Intel also expected to report today after the market close. Straddle is implying a move of 6.1% in either direction. That compares to 4-quarter realized average move of 8.8% and a 12-quarter average move of 6.8%. So 2.8% below the 4-quarter average, 0.75% below the 12-quarter average. High move in Intel, 16.2% in the last 12 quarters. CSX, also today after the market close, that straddles implying a move of 3.7% in either direction. That compares to a 4-quarter average move of 1.9%, 12-quarter average move of 3.4%. So 1.8% above the 4-quarter average, kind of in line with the 12-quarter average. The high move is 10.3% in CSX in the last 12 quarters after reporting earnings. Let's look at this last one for today. STX, expected to report today after the market close. The straddle's implying a move of 6.5% as of yesterday's closing prices. That compares to a 4-quarter average move of 5.9% and a 12-quarter average move of 3.9%. The high move on that in the last 12 quarters, 8.8% after reporting earnings. So we're 0.6% above that 4-quarter average, 2.6% above the 12-quarter average move. If there are no questions on this report, then I guess I'll go to the IBM.
Hit the IBM, buddy.
Okay. So I'm going to take a look at the IBM, and let's look for heading into earnings. Let's take a look at if we could find bullish and bearish scenarios for IBM, just to kind of hit our check marks. So before, let's start out with this. So this is showing us a historical reaction to earnings in IBM compared to what the straddle or what the options were implying. So over here, October 19th, as an example, that bar is telling us what the straddle is implying up or down. So October 19th, after the market closed, IBM reported earnings. The stock was down 6.5%. The straddle was implying a move of 4.3% in either direction. So you could see that red bar exceeds the bracket, the blue bracket, meaning that the move was more than the straddle was implying. So if you sold that straddle, you would have had to buy back for more, losing money. If you bought that straddle, it would have been profitable because the move was more than anticipated. These green bars, that's the move to the upside. So January 21st, after the market closed, IBM reported earnings. It was up 3.4%. The straddle was implying a move of 4.8%. So you could see the move was more muted than the straddle was implying. Looking at the historical statistics, the IBM overestimated the straddle overestimated the move 54% of the time historically. On average, prior to earnings, the straddle was implying a move of 4.9% in either direction. That compares to an average of realized moves of 4.5%. So it's about a 0.4% differential, okay, between the implied and realized. Let's take a look at what the implied volatility did. So this is looking at the implied volatility of IBM, and we're looking at the 30-day constant maturity, not the near term, but 30 days out. That has more vega. So we're looking at what the implied volatility tended to do day after earnings. So this is showing us that on average, implied volatility day after earnings was down 27%. Day before earnings, average implied volatility was 28.9. Day after earnings, average implied volatility fell to 21.2. 5 days later, on average, implied volatility fell to 19.8. So a little bit lower 5 days later. And if we scroll down here, this is showing us the historicals. We're right here. So on average, 28.4, 2 days before, high of 46.4, low 22.9. This is the day after reporting earnings. So that's where you get a historical table. If there are no questions, I'm going to keep moving on.
Someone was asking about the IBM alerts detected on that page in the upper right-hand corner.
Yeah, let me get to that, Will.
All right.
Later, because I wanted to go through that analysis about IBM.
Cool.
Let's take a look at stock patterns. And this is how IBM tended to do day of earnings. So we see here at the open tended to gap down more often than up for an average loss of 1.7%. You can see here average move up or down for in either direction 4.2%. So the gap at the open on average gap 4%, 4.2% roughly in either direction. After the opening, from the open to the high, average move was up 1.9%. From the open to the low, average move was down 1.5%. By the end of the day, half the time it was higher, half the time it was lower for an average gain of 0.1%. So you could see, at least from a historical perspective right now, to us, it looks like IBM tended to be weaker. Coming out after earnings, IBM tended to be weaker as well. So you could see here how it did day after, 2 days after, up to 2 weeks, tended to be weaker, didn't add, heading into earnings, it did pretty good. So you could see here, 2 weeks before, week before, tended to rally going into earnings. After earnings, it tended to be weaker. So at least from that historical perspective, it looks a little bit towards the weak side. I'm going to take a look at also the post-earnings drift. What did it do since the last earnings? So after reporting earnings, what did the stock do in between, and how does that compare to what it usually does? So over here we see this is the IBM Drift, right? So since it last reported earnings, the stock's up 12.4%. On average, the drift is about 0.6% historically, and a one standard deviation move up or down between earnings is 4.6%. So we see it's made a 2.7 standard deviation move to the upside as far as drift goes between earnings. So there is enthusiasm a little bit built into it since the last report. Okay, so reported earnings, it repriced last time. Since then, it has drifted higher, 12.4%, which is about 2.7 standard deviations, which it normally moves. And you could kind of see here, this is where we are today. These are the historical drifts. Okay. And we look at it as if it misses, maybe then to the downside, there's a lot of room, right? There's a big bubble. There might be some air. Maybe if it just beats or doesn't beat by enough, maybe the upside could potentially be muted. So that's right now from a price action analysis. Let's take a look at IBM on a valuation or a multiple. So here I'm going to take a look at the fundamentals here in IBM and see how does this price today as a multiple compared to historical levels. So IBM right now, its PE, 3-year average PE ratio 16.9. Right now we're at 14.7. So if it reverts back to its 3-year PE ratio, we're looking at $149 in Apple. This is price to sales. So this is its market cap divided by its revenue. So right now we're at 1.5%. So it's trading 1.5 times its revenue. 3-year average 1.6. So if it reverts back to its 3-year average, we're looking at $131 in IBM, which is right where it is now. Let's compare it relative to SPY. So we see here IBM's PE relative to the SPY PE. Right now, it's trading at a 58% discount to the SPY. So right now we're looking at 14.7 in IBM PE versus SPY 34.9%. That's a 58% discount to the SPY. Historical average is 34% discount. So if it reverts back to that, if it goes to the mean, we're looking at 204 on IBM. Let's do price to sales. So today, IBM's price to sales relative to SPY's price to sales, we're looking at a 44% discount. Historically, it traded on a 3-year average, it was at a 35% discount. If we revert back to that mean, we're looking at $150 in IBM. So if we take the average of these implieds, it's about 158. So from that perspective, from a valuation perspective, historical multiples, it doesn't look high. It's probably closer to the low end of the historical range. Okay. So we see here, these are the historical range. You could change that to the mean. By the way, this one, I'm doing improvements on it, but this valuation, I'm expecting to push out in the next 30 days. But if we change it to the median, 149, we could go to the 5-year average and the 5-year median, kind of the same. Okay, so at least from that perspective, it looks like on the low end of the valuation. Let's take a look at, now another thing, as I'm working on the insider trades, and I'm going to be improving that, so you're not going to see this, but what I did detect unusual in IBM was there was a cluster buying in between this quarter. So this could, let me show you what that means. So I'm going to take a look at IBM here. So I don't have the report, that cluster buy report on here, but that will also come out in the next 3 months. But here's IBM. So you see here, there's IBM. These are insider buys. You see 1, 2, 3, 4, 5, 6, 7, right? 7 different directors bought IBM. November, October, around this price, 108, 110, 112. You could see here how they gain. So we detected it as somewhat unusual. The stock has rallied since then. And you could see here, these are pretty decent buys from between $100,000 worth of stock to almost $500,000 worth of stock. So that could be some indication that management feels more positive about IBM, right? So we saw some, from a historical perspective, we saw some weakness in IBM after reporting earnings, but we also get some strong signals from that side. So again, I'm just kind of going through the checks and the reports. Let me know, Will, if you have any questions along the way.
Well, it's just interesting. I just popped up the summary and the best by theoretical edge. I mean, if you have been long IBM, it looks like the skew's allowing you to protect it now. But I mean, long put is showing up as one of the options for the best trade ideas. There's always ideas out there, that's for sure.
Okay. So if there are no questions, I'll just keep kind of moving on. We'll stick with the IBM, then we'll go look at some trade ideas.
Cool.
So the other thing you might want to do is look at IBM and say, well, what has management what was the last report? What did management kind of communicate to us? And let me also kind of absorb that. I'm going to go here. The easiest way for me, I'm just going to go look at their last report. So this is in the SEC filing. I'm going to go to their last report here. Okay, so they reported October 19th. Let's see if they gave us any guidance. So this is on the SEC filing. I'm going to open this up, and this is what their last report is. And I'm going to just kind of take a look at if they guided us in any direction, and what do they feel positive about? So these are the highlights. They're giving us earnings per share from continuing operations, non-GAAP earnings per share. So you could see there's a difference there. Here's where there looks to me like their focus, they're talking about their revenue. It was down overall. Here, cloud. So they're invested in the cloud, right? So they're generating revenue in the cloud. That's where it looks like they're being optimistic about, up 19% last quarter. So this to me now in my head is, okay, this is where maybe they're concentrating their business. What do I think the cloud has been doing? How has that business been doing since the last quarter? And potentially good, right? We're still in the stay-at-home economy. People are doing more business online, maybe are ordering more servers. They do have competition there with Amazon, so that's something to research. But here it looks like that's where they're kind of focusing my eyes. Red Hat, that revenue is up 17%. Well, what's that? That's like advertising, right? Red Hat, what's that focus?
Actually, I think Red Hat was a software piece back in the internet boom, where it was, everyone could use it, but I'm not exactly sure.
Okay. Well, that's the highlight. So it's shown me like kind of where the management is focusing, where they're feeling optimistic, and that's probably where we want to kind of pay attention. Do we think that's going to continue? Is that where their growth is coming from? Here they're giving us a little bit of a breakdown, in their GAAP numbers from continuing operations, operating non-GAAP. So we see that their earnings are not really stellar. They're not really growing here.
Yeah, just an FYI, the Red Hat is a multinational software company that provides open source software for our enterprises, and IBM acquired it in 2019.
Okay, all right, then that's that's where 17%. Their revenue was up 17% there. Let's take a look if we could get some more insights here. I'm going to just kind of really, my eyes are just skimming through this because we don't have a lot of time, but here, they're talking about their cloud and software, right? So that's on the top of the list. Revenues 5.6%, up 7%. Global services here, application management, those revenues, $4 billion, those were down, right? So these are down. Global technology services, revenues are down here. Systems, down, revenues down. Global financing, revenues down. So I'm just looking at the breakdown here, and is it all coming from this? Cloud, Red Hat, right? So far, so maybe that's where you pay attention to, unless these are starting to, improve all of a sudden. They talk about Red Hat. I'm not seeing any guidance so far, so they haven't guided, in here for their next quarter. They didn't give any revenue guidance, any earnings per share guidance, so that's still a mystery. They're gonna so this is, so far to me, that's what's jumping out: the cloud and the Red Hat revenues. They did have a conference call, so maybe go listen in on that. Let's see what else we could gauge in. This is a breakdown of their businesses, right? Where the revenues are coming from: global financing, systems, global technology, global business services, cloud, and cognitive services. These are their gross profits. This is a breakdown of their expenses. We see gross margins 48%. That's pretty decent. 48% is pretty decent, I think. I'm going to take a look, just kind of keep going, skimming through, seeing if we could compare. Look at these are their pre-tax margins. So year over year, last time it looks like they increased. It was 8.4%. Now it's 10.4%. So there was an improvement there. there was an improvement in their gross margins, 48% versus 46.2. So they're becoming more efficient in their profitability, right? Net margins improve, so they're becoming more efficient there. Let's come down a little bit more. These are their cash flow statements. Don't have enough time. I'll spend more and more time as the weeks come along, but let me just skim down just to see if anything else is jumping out here. Let me see. They're giving you the pre-tax margin, and they're breaking it down by their businesses. So here you see the cloud, 21.9%, global businesses, 13.4%. So you could see global financing, that looks like it's a big profit, margin for them, 42%, and the cloud, 21.9%. These are all smaller. Systems, very small. Global technologies, global business services, 13.4%. These are their two biggest pre-tax margins: cloud, global financing.
What do you think global financing is? Financing the sale of their services and products?
Maybe what you'd have to go in there and look deeper and read about it, but that's what I'm assuming, is that they're just financing the sale of maybe their hardware. The car manufacturers have financing arms. I remember, like General Motors, you buy a car, they'll finance it or lease it to you. So
that was a big part of GE's business, and it didn't turn out so well.
Yeah, the thing, it's big margins, but as a total revenue, you could see it's small, compared to the cloud.
Yeah, no, I see exactly what you're saying.
It's much smaller portion of their overall business, right? So this is the biggest. I mean, really, this is the biggest revenue right here, global technology and services, but it's very low margin. This one, though, second, maybe this could take over as number one. That's a decent, that's a pretty decent margin.
To be honest, I can't wait till you look at Amazon's. I'm wondering what piece of Amazon's revenue, right, and what the margin is there.
And when you start analyzing the stuff, then you know where to concentrate on. Well, what do I think the cloud? This is probably where people are concentrating their eyes on. Is that cloud growing?
Is everyone getting more in the space? Is the space growing, or is it because there are a lot of cloud only companies, right? Cloudera. I think maybe Lemonade, whatever. There's a bunch out there besides Amazon and IBM.
And here's their year-over-year growth in revenue. So you can see here, cloud up 5% year over year. All these other ones, they're down. All these are down as far as so maybe that's where they're concentrating their efforts, right? Revenues climbing here, these are going down. Let me take a look. Here we get some percentages. So here's some insights here. Again, they're showing us their GAAP numbers. I think they showed us their non-GAAP numbers above, but income margin 9.7%, pre-tax 10.4%. That's their effective tax rate here. Gross profits. And then they have, let me see if I could find anything that's jumping out. Because we've got a couple minutes left. So that's
just an FYI. Dr. Chameleon, aka Jake 44, says this is really good info, D, because it is not just throwing darts at the board, but trying to determine underlying themes which move all equities, balance sheets, cash flows, income statements.
Exactly right. This is what will start moving. Exactly. That's where people are going to be concentrating. That's how money is going to flow. So we'll get more into it, and we are going to create reports that make this easier for you to kind of digest and be able to link to. But just showing you kind of quick examples. I did different checks. Did it from a historical price action analysis. We looked at what the insiders are doing. We're taking a look at, the fundamentals and where IBM, where they're concentrating their efforts, where we think they need to do well to beat. And we also looked at their valuation relative to historical levels. So we crossed off a lot of checks really quickly today. I'm going to let you guys go in there and read more about it and analyze it deeper.
Awesome. And bring it to the chat tomorrow, everyone. D, awesome job. Thanks so much. Chameleons, thanks for joining us. Remember, thumbs up if you're new, subscribe to the YouTube channel. Great job, D. Thanks.
Right. Thanks, everyone, for